Okay, we're here with Jim Robb, who's the director of the Livestock Marketing Information Center. He's based in Denver, and we're at the Range Beef Cow Symposium in Nebraska today, and Jim just gave a presentation looking at some of the major trends in the industry. And Jim, I wonder if you could just summarize a little bit and tell us a little bit about what we've seen in cattle numbers, both domestic and globally, and beef production and supplies, and what some of the implications are for producers over the next few years.
Well, first of all, we look kind of around the world. We're seeing that the cattle numbers seem to be stabilizing in Canada, still declining in Mexico. Some other countries around the world, Australia seems to be stabilizing, Argentina is still declining, Europe still declining, Russia declining. So a bit of a mixed bag. In the U.S., our cattle numbers, mostly exacerbated by the severe drought in the southern plains, still seem to be declining.
And as we look ahead, we've seen prices for beef and for cattle of all classes increasing, and as those supplies continue to drop, and we might see some heifer retention maybe over the next couple of years. What kind of effect will that have on the long-term trends for supplies and prices as you see?
Well, we expect as of January 1, 2012, the nation's beef cow herd will be down fully 2% from a year ago. And that really sets in stage. We'll start holding back heifers, but it's going to be a mixed bag across the U.S. We see the northern and the western states probably continuing to increase their beef cow herds, and most of the adjustments happening in the southern and central plains. As we look ahead, beef production will be tight and getting tighter, and that translates into per capita consumption, especially because of our strong export markets continuing to decline in the U.S. That's really not all that bad of news, because per capita consumption is not exactly the same thing as beef demand, and consumers are willing to pay very high prices for beef, and that's sort of been part of the underlying good news for the U.S. beef cow producer.
Eventually, as production hopefully returns to the southern plains area, that should probably create quite a bit of demand for beef females, for replacement heifers or beef cows, cow-calf pairs to kind of move back into some of that area as the forage conditions improve.
And we think mostly in the southern plains we will see a resurgence and rebuilding of cow herds, and it could happen rather quickly given the economics in the current situation. Some of these, and that could really be a spark when the moisture does return into these calf, yearling, and these bred animal, even heifer calves could bring prices that we have not ever really seen before.
So overall, the outlook is pretty positive for cow-calf producers and for other segments of the industry over the next few years.
I think especially for the cow-calf producer, the feedlot side and the packer side will struggle with these ever-tightening numbers, and as we hold back more heifers for replacement purposes, they're going to come out of the beef system. So I think there are, but the really bright side is that the signals are being sent to the cow-calf producer. I think the economics are actually better in that industry. Even though we have very high costs of production, looks like we have some profits ahead if Mother Nature allows us to have some moisture.